2013 was a year of breaking records. I'm going to make a few comments on 2013 as a way of setting the scene for 2014. The first broken record in 2013 was volume of transactions. Across the office, industrial and retail sectors, we saw $23 billion worth of transactions, which is 20% up on 2012, which itself was comfortably in record territory. A second broken record was the volume of offshore investors coming into Australia. We recorded $6 billion worth of transactions by offshore investors in 2013. Another record which has attracted rather less attention is sales by offshore investors moving out of Australia. In 2013, $2 billion worth of sales were recorded as offshore investors redeployed capital away from Australia. A final record, which is perhaps less attractive but nevertheless important, is what's been happening on the leasing front. Across the CBD office markets, we recorded negative 240,000 square metres of negative net absorption in 2013, which makes it the weakest year on record. This again reflects, as we've been discussing in recent quarters, the dichotomy between subdued leasing demand and aggressive investor activity. So how does this set the scene for 2014? Firstly, we expect offshore investors to continue to be attracted to Australia. Over the past 4 years, 2010, 11, 12 and 13, we've seen a very stable 25% of all transactions going to offshore investors, and there's no evidence at this stage that this will change in 2014. We also expect to see increased activity from domestic investors, in particular real estate investment trusts, as they reallocate their portfolio and redeploy their capital into Australia. Leasing activity, which of course has been very subdued recently, is likely to remain relatively subdued in 2014, although we do see a return to positive take-up of space during 2014. One of the conundrums for 2014 will be availability of product. Given the strong level of investor demand, both offshore and domestic, one of the problems will be for investors to find suitable product to satisfy their mandates. So we expect to see increased M&A activity, for example, amongst domestic funds during 2014. We also expect to see investors going up the risk curve as they move away from prime CBD office markets, for example, and regional shopping centres, and start to look at other asset sectors such as sub-regional shopping centres and non-CBD office markets. One way around the shortage of product is to buy part shares in assets. For example, in 2013, we saw 7 regional shopping centres transact, and of those, 6 of those sales represented part shares in those assets. Alliances between domestic investors and offshore players has been a growing feature of 2013, and we expect to see that trend continue through 2014. For example, we've seen alliances formed between Dexus and the Canadian Pension Plan Investment Board, also between Mirvac and K-REIT, and we expect this trend to continue through 2014. Another feature of the scarcity of available stock is increased interest in development activity. For example, we've seen an alliance formed between Grocon, the largest private developer in Australia, and UBS Asset Management. Finally, with the growth of domestic funds under management in Australia, it won't be too long before we think Australians will once again become quite prominent in investing offshore. And during 2013, we've seen some early evidence of increased appetite by Australian investors for assets in offshore markets. A final theme of 2014 that deserves mention is the increase in the Australian market by Chinese investors. We've seen Chinese money moving quite aggressively into Europe, for example, North America, and we've also seen it emerging in Australia. Chinese developers are interested in developing residential assets, and Chinese investors are interested in buying those assets. So in Australia, we see Chinese money coming in on both sides of the market, both in terms of increasing the supply of residential apartments and also purchasing those apartments. So 2014 promises to be a continuation of some of the big themes that we've seen through 2013, with the addition of some new and emerging events.